Morning, YouTube. Morning, everyone. Happy Friday. We got the weekend coming up. I hope everyone is doing well. And in today's video, you may have seen the title naturally, and we keep talking about an economic slowdown, economic distress, all that stuff. And we're starting to get those wheels spinning by earnings, right? The market has been going up. I understand that. We have seen that. There's no underlying buying, though. We can zip a little higher as well because we have these bear market rallies that are sprung out by weaker bids, by lower volume when big institutional money isn't around before they do reload the short. So you could even see 4,200 on the S&P futures before we start seeing that downturn. Now, I don't think we get that high realistically with the events that are coming up next week. But the point being, there is still that bearishness in the air. There's still that economic downturn in the air that a lot of people are misinterpreting based on this most recent rally. Now, we had some earnings that are preemptively foreshadowing some key events. Now, I'm not saying that Snapchat earnings are by any means important or impressive for the general economy, but it does foreshadow a series of different things to come, right? The tech sector did have a good day on Thursday with NASDAQ up 1.4% until Snap kind of sharply dented the sentiment with its earnings results. The Snapchat owner posted its weakest ever quarterly sales growth as a public company, with revenue that increased just 13% in Q2, 7% below the low end of its April forecast, and net losses swelled up to 178% year over year to 422 million, prompting a 30% drop in after hours, losing nearly 3/4 of their value over the last year. So in a macroeconomic sense, from the macro conditions, rising inflation and seeing companies pull back on advertising spends, while changes to Apple's privacy policy have also slammed digital ad focused businesses. Things like Meta, right? It's down as well. It's not as aggressive, but Snap has tried to search for new resources of revenue, including paid and premium services, but noted that it was not satisfied with the results that they were delivering. So the company also didn't issue guidance for the current quarter, which is something that we're going to have to watch for every single mega cap tech earnings that comes out, because a lot of them have already posted. I think Microsoft already warned that there's going to be weaker forward guidance or no forward guidance for the few quarters to come. Now, it will substantially reduce its hiring rate and tightly control operating expenses. When you start seeing job hiring slow, right, that is literally the peak of the economic cycle where you expect that downturn. And we've seen a lot of that in a lot of tech names, right? It's just a macroeconomic business cycle event, if you guys aren't aware of that. But while the continued growth in our community increases the long-term opportunity for our business, our financial results for Q2 do not affect our ambition. That's what the CEO said. And we are evolving our business and strategy to reaccelerate revenue growth, including innovating on our products, investing heavily in our direct response advertising businesses, and cultivating new source of revenue to help diversify our top line growth. And that's what Snapchat said. Realistically, I don't know the potential of this. They got bought up pretty aggressively when we had all that quantitative easing, and now when actual revenue and the real underlying fundamentals matter, they're not doing so hot naturally, right? They can't generate revenue from multiple streams, or just in general, there's no longevity in it. We also have earnings on Twitter coming up this morning. They might have already posted, to be honest. I haven't really looked at it, honestly. But we have Twitter. Why don't we just take a look at that quickly here? Why not? It's not going to kill us. Twitter looks like it's relatively flat. Or no, it's down a bit from the earnings announcement. I think the earnings they posted negative earnings. We have a surprise miss in earnings, 157% miss in earnings, an 11% miss in the estimated revenue. The earnings reported were negative, right? Negative 8 cents versus positive 14 expected. Revenue reported 1.32 billion versus reported 1.17 billion versus 1.32 billion. So miss on both fronts on Twitter. Not surprising considering Snapchat missed on that as well, based on a lot of ad stuff and the revenue misses. So they're probably sharing a similar story as well. Other digital media platforms, we see Google and Meta report next week. So Google, that's going to be the main one to watch, right? They've also alluded to the hiring process and the not so great forward guidance outlook as well. So those are a few things to consider. And like Tesla did fairly well, but I think it's going to be more important to watch and see how the bigger names like Apple, Google, like Meta, even kind of run the show here, Microsoft, because they have a little more influence on the economic standing in my perspective. So those are names to watch out for. But when we're speaking of tech, even Amazon, when we're speaking about tech here, we also they're innovating, right? There is innovation behind it, and they're looking for that next step because we're talking about robo taxis now. This is just something that I found. It's not as important on the economic condition, but we're talking about the robo taxis here. And Baidu unveiled its all electric Apollo RT6, a production ready model featuring a detachable steering wheel that should hit Chinese roads 2023. So over in the US, we have Amazon. Zoox, I believe it's called, became the first self driving tech company to achieve five-star federal crash rating from NHTSA and applied for a permit to test drive in California. We also have um, Google right in the mix, Waymo, but on the other hand, we have Amazon Zoox has developed its robotaxi from scratch rather than modifying existing vehicles with technology, which is Cruise's GM. Origin trying to do the same. And Amazon scooped up the startup for 1.2 billion in 2020, and shortly thereafter unveiled VH6, which has room for four passengers that can drive up to 75 miles an hour on the highway. And there's no steering wheel in the vehicle, and that's produced at Zoox's Cato factory in Fairmont, California, just down the road from the robotaxi hopeful an EV leader, Tesla. So realistically, we'll see how that shapes up. There's a lot of innovation on that front, and in just a year, we could see those things hit the roads, and that really opens up another stream for a lot of these tech names, like whoever kind of establishes themselves first. But right now, as it stands, we're still in an economic downturn, right, from a macro perspective, even though we're seeing these markets continue higher and higher and higher. And next week, I'm expecting to see a topping for the short term, right? We've already seen Google's kind of slam down. The overall equity market is continuously rising. And I'm going to be watching very carefully the 4,004 area to start the day. 4,004 on the S&P 500 futures. If we can get above that and accept above that, I think there is going to be a move 20, 30 points to the upside, right? That's going to be a huge area where we rejected last time, and it is the ledge of a distribution block that we do need to watch out for. So we have the 3,990 area, which I'm going to watch as kind of a pivotal area to see if price actually holds out there. If they don't, right, we can start to see that slip down. We start breaking under 3,973. That accepts into a large distribution block that is going to start the downside move, right? Under 3,973-ish, that is where I'm going to lean to the bearish side and look for that hold to the downside. That's going to be that's going to be the biggest area for the shorts to come out. So keep that in mind. Having said that, thank you all for joining me today. We got Fern, we got technical analysis, and my CryptoPie. Thank you guys for coming on, saying what's up. I hope everyone has a great Friday. Remember, Fridays are not make or break. What we do with Fridays is trade small, risk a little of what you have for the week, and look for the opportunity. If it's not there, it's not there, and then go do something else with your day. We'll have a great weekend setting up here. I hope everyone enjoys, and we'll chat to you on Monday. So thank you and take care, everyone.